Let me tell you a story I've seen play out more times than I can count. Imagine two men, same age, same city, same life on paper. Let's call them Mark and Dave. They're both 30 years old. They work the same job, earn the same salary, about $75,000 a year. They live in identical houses, right next door to each other, in the same quiet suburb. They drive the same gray sedan, park it in the same driveway, wake up at the same time, and stress about the same bills. If you looked at their lives from the outside, you'd swear they were financial twins. Same effort, same discipline, same lifestyle. Now, here's the part nobody ever tells you. Over the next 30 years, one of these men is going to pay hundreds of thousands of dollars more than the other for that exact same life. Not because he's reckless, not because he's bad with money, not because he made some catastrophic mistake. He's going to pay more simply because the system decided he should. And the most disturbing part is this. He'll never see that money leave his hands all at once. It won't feel like a punishment. It will feel normal, quiet, invisible. And that's exactly why it works. That extra money doesn't disappear in one dramatic moment. Nobody lights it on fire. Nobody loses it in some stupid crypto gamble. It gets handed over slowly, quietly, month after month, to banks, insurance companies, and landlords, all because of a 3-digit number attached to your name. One man has a 760, the other has a 640. That's it. That's the difference. And over a lifetime, that difference adds up to roughly $250,000 for the exact same existence. This is what I call the poor tax. We argue endlessly about income taxes and sales taxes, but almost no one talks about this one, even though it's far more destructive. Because you don't see it. You don't vote on it. You don't get a receipt for it. It's baked into interest rates, deposits, premiums, and approvals. It doesn't feel like theft. It feels like life. And that's why most people never question it. Here's where most people get it wrong. They think that 3-digit number is a judgment of their character, that it's a scorecard for responsibility, discipline, or how good they are with money. It's not. It's not a measure of your work ethic. It's not a measure of your intelligence. It's not even a measure of how much money you have. It is a measure of how profitable you are to the financial system. That's the truth most people never hear. In today's high-interest environment, banks don't reward virtue. They reward predictability and participation. They want borrowers who keep the machine running, who borrow, pay interest, and do it on schedule. The more useful you are to that machine, the better the number treats you. And before anyone jumps in to defend the system, let me be clear. Yes, it started as a way to price risk at scale. But over time, risk management quietly turned into profit maximization. And once that happened, this number stopped being neutral. Let's put real numbers on this, because math doesn't care how fair something feels. The biggest purchase most people ever make is a home. Say you're buying a $400,000 house. Same street, same roof, same drywall, same patch of grass. If your credit score is around 760 or higher, you might qualify for the best advertised rate, let's say 6% in this market. But if your score is closer to 620, which is where millions of hardworking Americans sit, the bank doesn't say no. They just quietly raise the price, maybe to 7.5%. On paper, that 1.5% difference looks harmless. It's not. Over a 30-year mortgage, that gap adds up to more than $100,000 in extra interest for the same house. And here's the part that should really bother you. That money isn't just gone. If you had invested it instead, it could have compounded into several $100,000 more. So the real cost isn't the interest. It's the future you never get to build. And here's where this system crosses a line. That 3-digit number doesn't stay inside the bank anymore. It follows you out into the real world and quietly turns into a reputation score. Auto insurance companies use it to decide what you pay, even though it has nothing to do with how you drive. You can have a perfect record, no tickets, no accidents, drive like a grandma, and still get charged more because your score dipped. Landlords use it to decide where you're allowed to live. Utility companies use it to decide how much cash you have to hand over just to turn the lights on. In some industries, employers even check it before they decide whether to trust you with a job. One missed payment years ago during a medical emergency can still follow you around like a moral stain. At that point, this number isn't pricing risk anymore. It's deciding access, where you live, what you pay, and how much friction you face at every step of your life. Here's the moment that should make you stop and sit up straight. Studies have shown that a driver with a clean record but poor credit often pays more for car insurance than a driver with a DUI and excellent credit. Let that sink in. The system trusts someone who drove drunk more than someone who drives safely but struggles financially. That's not about risk. That's about money. It's the poverty premium in its purest form. And once you see it, you can't unsee it. This number quietly decides who gets grace and who gets punished, who gets flexibility and who pays extra for the same thing. Not because of what you did behind the wheel, but because of how profitable you are on paper. When a financial score starts outweighing real-world behavior, you're no longer dealing with a neutral tool. You're dealing with a filter that separates people into tiers. And that's when you realize this game was never designed to be fair. Here's the part that really exposes the game. This score doesn't measure how much money you actually have. You could have $10 million sitting in cash. No debt, no loans, no credit cards. And to the algorithm, you barely exist. You're unscorable. A ghost. But someone else could be living paycheck to paycheck, drowning in minimum payments, constantly borrowing and repaying just in time, and the system loves them because they're participating. This score doesn't reward independence. It rewards churn. It rewards people who stay inside the debt cycle and keep paying interest on schedule. That's why people who use cash get punished. That's why paying off a loan early can actually make your score drop. Have you ever paid something off and felt proud, only to watch your score fall? That's the system saying the quiet part out loud. We liked you better when you were paying us. Once you understand that this is a game, the next question becomes obvious. What are the rules? And this is where ignorance gets expensive. The biggest piece of your score, about 35%, is payment history. It's brutally simple. You either paid on time or you didn't. One missed payment can haunt you for years, not because you're irresponsible, but because the algorithm has a long memory. The second biggest piece is credit utilization. That's the ratio of how much credit you use versus how much you have access to. Spend $500 on a card with a $1,000 limit, and the system thinks you're desperate. But raise that limit to $10,000 and spend the same $500, and suddenly you look calm, controlled, trustworthy. Nothing about your behavior changed, only the optics did. This isn't about paying off debt faster. It's about looking like you don't need the money, even when you do. Rich families teach their kids this early. They add them as authorized users, copy-paste decades of perfect history, and send them into adulthood with a head start most people never get. That's how inequality quietly reproduces itself. I know some people listening to this are thinking, fine, then I'll just avoid debt altogether. And on paper, that sounds clean, moral, responsible. If you can buy a house in cash, pay for everything outright, and never touch credit, do it. That's opting out of the matrix. But let me be honest with you. For the vast majority of Americans, living with no credit score isn't freedom, it's friction. You'll pay higher security deposits. You'll get passed over on rental applications. You'll face extra hurdles just to turn on utilities or get insured. The system doesn't reward purity, it punishes absence. So the practical move isn't to boycott the score, it's to treat it like an annoying game you play efficiently so you can move on with your life. Not because you respect it, but because you refuse to overpay for everything. Opting out sounds noble. Playing smart is what actually protects you. So how do you protect yourself without letting this number run your life? You start by getting organized, because this system is designed to extract money from the disorganized. First, automate everything. Payment history is the biggest piece of the score, and a single late payment can stain you for 7 years. Set every bill to auto-pay the minimum, not because you plan to carry debt, but because forgetting once is expensive. Then you play the limit game. Every few months, ask for credit limit increases. Most of the time, it's a soft pull. No damage, just more room to breathe. You're not borrowing more. You're expanding the denominator. Keep your oldest accounts open, even the dusty ones you never use. Length of history matters, and closing old accounts is like erasing experience from your resume. Buy a pack of gum once a year if you have to. This isn't about impressing banks. It's about refusing to pay extra because of avoidable mistakes. Let me be very clear about this. The goal here is not to worship your credit score. It's not a badge of honor. It's not proof that you're winning at life. It's a tool, a game token, a VIP pass that gets you access to cheaper money so you can stop bleeding cash and keep more of it working for you. That's it. You protect your score not because you care what banks think, but because you refuse to pay the poor tax for the rest of your life. Every dollar you don't hand over in unnecessary interest is a dollar that gets to compound for your future instead. This isn't about pride. It's about leverage. Once you understand that, the fear goes away. You stop panicking over every small fluctuation. You stop tying your self-worth to a number you didn't design. You use it, and then you move on. That's how you take power back without burning yourself out. If this video made you uncomfortable, that's a good sign. Discomfort is usually what shows up right before clarity. For years, many people have walked through this system thinking they were bad with money, irresponsible, or somehow behind everyone else. That was never the full story. You weren't failing. You were playing a game without knowing the rules. And systems love players like that. The moment you understand how this works, the power dynamic shifts. You stop blaming yourself for outcomes that were engineered. You stop overpaying quietly. You stop accepting worse terms because you think you deserve them. From here on out, you don't fear the number. You manage it. You keep your utilization low. You dispute errors because 1 in 5 reports has them, and you stay organized because organization makes you unprofitable to the system. That's the real win. Not rebellion, not perfection. Awareness. And once you have that, the poor tax loses its grip on you.